Well, it's almost the end of 2020, Kristina. Obviously, we've had a lot of records. We've had a great November. What are some of your scenarios? You have a base case and then a bullish and bearish strategy here.
Well, our base case is that we see improvement in the economy, significant liftoff in the middle of 2021, sort of the back half of 2021, but early in the back half. And that, of course, would be because of the introduction of a vaccine that's broadly distributed by then. However, there is an upside scenario, and we look like we're a little closer to the upside scenario just because of the timeline that has been shared regarding the vaccines, that actually we could see wide distribution by April. And that could, in turn, move up our timeline. We could see improvement in the second quarter, and we could, of course, see a very strong rebound. Of course, we'd like to also see additional fiscal stimulus. That would be part of the upside scenario. If we don't get adequate fiscal stimulus, that would be our downside scenario, where it takes longer to get a vaccine and it takes longer for the economy to recover. And that's where we get the most economic scarring. In that scenario, that's where we would see growth stocks perform better, defensives, the secular growth names. But in the upside scenario, of course, we'd see risk assets, particularly the value side, the cyclicals, the smaller caps perform better.
Yeah, which the smaller caps have already done so well when we look at what's been going on. I mean, it's amazing. They're the best performers for the month of November. We also have lawmakers getting back together to try and give it one last try for a deal. You mentioned stimulus. Any chance? Maybe. You never know, right? I mean, you know that the president, you know that both sides want something to be done. Maybe there's a chance that they get something done now. They are giving it one last go.
Yeah, absolutely. We can always hope for fiscal stimulus. I think it's unlikely that we get it until 2021, but we can certainly hope for it, and that's definitely what's needed. I mean, it's clear that's why we're hearing Fed officials talk about the need for it. It's critical, and the longer we go without it, the more economic scarring, to use that term again.
When you talk about your best case scenario, and you said you're more likely to see the best case than the worst case, and that's because what's coming down the pipeline here with the vaccines is looking pretty good, and maybe even a little faster than we anticipated. Where would you put your money? You talked about trying to be in some more risky assets. What kind of investments are you saying that people should consider having in the portfolio?
So if we're talking about an upside scenario, that is where we have the greatest potential for a strong economic recovery sooner rather than later. And so that would mean a rotation, and we're already starting to see this, right, in markets, is that rotation to the cyclical, to the smaller caps. Also, more international equities, less with regards to what we perceive to be less risky asset classes. But in a base case scenario, which of course still remains the highest probability, we're likely to see a slow to cyclical caps. It will just be more gradual. But we want to have adequate exposure to risk assets, and that's we will see a recovery. It will just take a little longer. And then finally, even in our downside scenario, we're likely to see a recovery. It's just going to take longer, and so we're likely to see defensives and secular growth outperform for longer in that case. And we're likely to see fixed income perform better than equities. We also, of course, want to have some exposure to alternatives in all those scenarios.
Right, right. You know, I know you talk about China being a leader, and there are a lot of folks who want to invest abroad. Are you a believer in that?
Absolutely. We always want to be well diversified and have international exposure. But in particular, we would expect in the upside scenario that international would perform better. that we'd see a weaker dollar. So there are a lot of reasons why. Now, in particular, China looks attractive because it's been able to manage this pandemic so well. After a difficult start, it has done a very good job. And what we're seeing is an economy that is improving more quickly. We expect in the base case scenario, and certainly the downside scenario, that the Chinese economy lead, and it takes some time for other economies to catch up.
What do you think about some of the other news that we've been getting in? I mean, as far as the economy, Friday we get a jobs report. I know we have generally a weak dollar, but some of the economic news has been a little bit mixed, but the feeling is a good one going forward. What is your takeaway when you look at jobs and everything else for that matter? I mean, housing's been great, but took a breather today. What do you think?
Well, I will tell you the single most important piece of data we need to look at right now is mobility. Mobility tells us what is likely to happen in terms of economic activity. It's a proxy for demand. And even if we don't have broad lockdowns, people can certainly curb their behavior and reduce their mobility, which is likely to result in reduced economic activity. Now, of course, we certainly see a pickup in online activity, so I don't want to disregard that. But in general, mobility gives us a very good sense of how strong the economy will be in the very near term. And so following that is very important. Is very important, but it is looking in the rearview mirror, right? And we need to be looking forward. And so again, mobility is important to me to give me a sense of what's going on. Also confidence. I would expect CapEx spending to pick up. I would expect business confidence, of course, to pick up in advance of CapEx spending. And that I would expect to happen in the first quarter, just given all the optimism around when a vaccine will be broadly distributed.